What happens when a company once seen as the future of transportation faces a 71% plunge in profits? And what if that same company is now caught in the middle of global trade chaos and political turmoil? Today on Profit Powerhouse, we're breaking down the shocking Tesla earnings report that's rattled Wall Street. Just one day after President Trump reignited his feud with the Federal Reserve, we'll unpack how Elon Musk's political alliances, changing consumer sentiment, and volatile market conditions could spell serious trouble, not just for Tesla, but for the entire electric vehicle industry. So, buckle up. This is a story of money, power, and perception, and you don't want to miss what's next. Wall Street is bouncing back today, with markets clawing back some of the losses suffered during yesterday's chaotic trading session. This rebound comes on the heels of yet another high-profile political clash, this time between former President Donald Trump and Federal Reserve Chairman Jerome Powell. Trump didn't hold back, labeling Powell a major loser, while continuing to pressure the Fed to slash interest rates. This added fuel to an already tense economic atmosphere, sending ripples across global markets and investor sentiment. But while most eyes were on Washington, the real earthquake hit from Silicon Valley, or more specifically, from Tesla. The electric vehicle giant just released its first quarter earnings report for 2025, and to say it fell short would be an understatement. Tesla missed both earnings and revenue expectations, and in a big way. The company posted a staggering 71% decline in profits, alongside a 20% drop in automotive revenue. Even total revenue shrank by 9% year-over-year, landing at $19.3 billion. This marks a major reversal for a company that once symbolized unstoppable innovation and investor confidence. What went wrong? Let's dive deeper. Joining the broader conversation around Tesla's sudden downturn are several factors. First, analysts point to the volatile geopolitical climate, particularly evolving trade policies that have shaken up the global supply chain. With tariffs hitting key components and materials, the cost of producing EVs has surged, even for American manufacturers like Tesla. And though Tesla's factories are US-based, many of its parts are sourced globally. That leaves the company extremely vulnerable to trade wars and international disputes. These rising costs don't just eat into profit margins, they also force potential buyers to reconsider purchases due to higher vehicle prices. Next, there's the political element. CEO Elon Musk has increasingly aligned himself with the Trump administration, even taking on advisory roles. While some consumers admire his boldness, others are taking a stand, not at the ballot box, but at the dealership. Tesla itself acknowledged this shift, stating that changing political sentiment could have a meaningful impact on demand for our products. That's a corporate way of saying people are voting with their wallets. There have been rising reports of Tesla showrooms being vandalized and calls on social media to boycott the brand. This growing backlash appears to be translating into actual sales declines, something that's hard to ignore when profits fall by over 70%. Tesla's own statement is revealing. The company noted, uncertainty in the automotive and energy markets continues to increase as rapidly evolving trade policy adversely impacts the global supply chain and cost structure of Tesla and our peers. In plain English, not only is Tesla hurting, but other car makers are feeling the heat too. But because Tesla is such a high-profile brand, and because Elon Musk is such a polarizing figure, the company becomes an easy target for both criticism and activism. Earlier this year, Musk commented on the pressures Tesla is facing, including challenges from international tariffs and consumer sentiment swings. He shared these thoughts on his social media platform X, underscoring just how much politics is beginning to influence purchasing decisions. Let's not forget, Tesla once had the advantage of being an aspirational product. Owning a Tesla was seen as a futuristic, eco-conscious move. But in 2025, the brand is increasingly seen through a political lens. For many, buying a Tesla is no longer just about driving electric, it's about making a statement. And that's exactly where the danger lies. When a product becomes politicized, its market share becomes fragile. We've seen this before. In clothing brands, tech companies, even food chains. Tesla may be the next in line, unless it finds a way to reset its image and refocus on what made it popular in the first place: innovation, sustainability, and performance. From Wall Street's perspective, this earnings miss is more than just a financial hiccup. It's a red flag. Investors are now reevaluating the company's long-term growth potential, especially in an industry that's becoming more competitive by the day. Rising rivals like Rivian, Lucid Motors, and traditional auto giants like Ford and GM are rolling out their own electric models, some at more competitive prices and with fewer controversies attached. The war is no longer just about technology, it's about trust, branding, and public perception. So, what happens next for Tesla? The road ahead involves serious strategic recalibration. From supply chain restructuring to public relations overhauls, the company needs to reassure both consumers and investors that it still holds a leadership position in the EV space. As for Wall Street, today's rebound may be temporary. Markets remain highly sensitive to political tension, trade policy changes, and unexpected earnings reports, especially from giants like Tesla. And when you add the Trump-Powell tension into the mix, the market feels even more unpredictable. If the Fed does respond with interest rate cuts, it could spark another wave of short-term optimism, but without real corporate earnings support, that rally may be on shaky ground. At ProfitPowerhouse, we'll keep tracking how these macroeconomic and political forces intersect with financial performance, and how that affects your investments, your strategy, and your future. If you found this breakdown insightful, be sure to hit that like button and subscribe to ProfitPowerhouse for more deep dives into the stories that really move markets. Don't miss our next episode, where we'll cover the global semiconductor crunch and what it means for tech stocks in 2025. Thanks for watching.